Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Market-wise, let's take a look at it out here. We get the Dow Industrials up 81, NASDAQ up 38, S&Ps are up 14, gold contract up $11, trading at $1,194 an ounce. Silver up 8 cents at $16.14 an ounce. Copper down 4 pennies at $3 a pound. Light sweet crude cracking that low out there, down 124 at 74.41. Bonds, the 10-year is up 5 ticks at 126.20. 30-year is up 10 ticks at 141.22. King dollar down 355 ticks, trading out at 87.65. The euro is up 83 at 125.33, and the yen is up 29 at 116.93. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a leg up here. We're up $13. You're at 2054. We take a look at the SPY. What do you have with the SPY? SPY is up $1.50 at 205.86. And that also is pulling away from the consolidation that has been in since September. Bottom line is that you got 52 million shares. She's taken out the swing of 85 million. You're not going to do the volume. We'll see how this trades into the close. Now, if we go over to the future, we'll do the futures right first. The E-minis, what you have with the E-minis is this, is that thus far the last leg up, so the leg up that we had at 2 o'clock. 2 o'clock, the E-minis went from 2050 to 2052. You had contracts out there of 25,000. You're testing that area right now, and it looks like you're going to have enough volume because we're at 14,000, and we're dealing with. What's going to happen? Yeah, she's going to open it up at the highs. She's not going to test the highs, which is the 54. She'll open up right there, so that'll make a little leg up. I suspect before the close out here. Dow and NASDAQ Composite. We take a look at the NASDAQ Composite. What we have with the Composite. Composite's up $38. You're trading out at 46.74. If we do the NDX 100 and we take a look at the NDX 100, that also, the 3 Qs, 17 million shares. Volume continues to contract dramatically. I suspect we're only going to do about 23 million out here versus the 28 versus, versus like 36, 37 million. The IWM, now the Russell 2000, which is still unusual, meaning that it can't get any traction. And it can't get any traction, which is really unusual out here today. It must be the small oil stocks that are basically keeping this down, because certainly the gold stocks, silver stocks, they're on the move topside. Russell 2000 still can't get any traction. You're at 116.60. The high, even from last week, was 118.25. The actual high is 120.97. Gold contract. What do we have with gold? Gold contract out here today, up $10. We've hit a high of 1204. You've done 158,000 contracts out here. You're building some good cause to get up into this 1255 area. It's going to be interesting how this shakes out. We're definitely inside the higher range right now. Once you got back inside the 1183, which we did this morning, that sets up, wants to go up there and test the 1255 area. What you have with silver, silver's going to need more juice, but bottom line, inside the silver market, sideways move out here today. Silver needs another sign of strength. What you do have, and this is where this gets really intriguing, if you look at the FNV, Franco-Nevada is up at its swing point with volume. Franco-Nevada is up 212 today, $55.98. She's going after the swing of $56. We've already done 1.1 million. The swing has 1.3. Franco-Nevada, we go over to Royal Gold. We take a look at Royal Gold. Both of these are royalty companies. Royal Gold also is at its swing right now, has some good juice underneath it. We've done 942 million. That is going at the 774, so that's coming into the swing with volume. And check this out for silver, SLW. This is important because this is also saying silver's going to go. Silver Wheaton, largest silver broker out there, the swing point 20.73. You're at 21.30 right now. We're doing 5.9 million. It's going to need a little more juice, but bottom line is it's showing up. It's showing up in a big way. So what you do have inside the context of Franco-Nevada, Royal Gold, and Silver Wheaton that is giving you bigger confirmation that the gold market, the silver market wants higher price. We go take a look at the oil market. Let's take a look at this oil market. Oil is cracking out here. Where is she? Okay, so crude oil's down 1.7%. You're off $1.28. We're trading out 169,000 contracts. And you know what? This thing probably is going to go into $70. It's going to be pretty intense going into $70, no doubt about that. Bonds. We go to the 10-year bond first. We take a look at the 10-year bond. What we have with the 10-year, refusing to back off, sideways move out here today, 752,000 contracts, edging slightly higher. These bonds still want higher price. 30-year bond, same setup in the 30-year. 30 years done 193,000 contracts. King dollar. Now, this is where this is going to get wild, and this is why. King dollar, folks, is down 346 today, and that's not a lot. You're at 25,000 contracts. Yesterday, it wanted to make a run for the highs. Couldn't make it. This morning, what you did is that we come back, and it's actually still light volume. You know, yesterday went up on 28,000, but what we had done is that we got to a lower low than the prior day. Today, you're just pulling back down, and King dollar is going to need a bit more volume on the way down. And most of the trading is over for the day. So we'll see if, in fact, we get more volume. The continuous contract, the way that gold is trading right now, the way is that the way gold flat out is trading and the gold equities and the silver equities are trading is telling me that King dollar has hit its high. Now, the real key is going to be, has that hit its swing high? I was testing the 2010 swing high. It missed it by about 66 ticks. I think it was 66 ticks exactly. You know, we made it to 88.36, and it was 88.80. We'll get an answer at the end of this week. The reason being is that the continuous contract right now is trading at 87.66. You close under 87.24, okay, which is another 400 ticks lower. That would confirm that you closed under the high of last week, and then that pullback would basically get going. So, and in the context of King dollar in the market, bottom line is that that's where there's divergence, no doubt, because when King dollar was pulling back slightly even the last couple of weeks, the market couldn't stand it. Well, guess what? The market is going topside, period, no matter what happens out here today. Some of the high-volume stocks in this low-volume market, you have Apple up $1.46. Bank of America is flat. GE is up 40 cents. You get Baker Hughes down $1.50. Gilead Science is up 3.28. Let's go over to Gilead because Gilead looks like to me it's been topping out. Yeah, you get a. This actually looks like it's building an ABC structure on the way down. So Gilead is off its high of 116. Has a high volume swing point at October 15th at 91. Came down again with 23 million going up at 16. Yeah, it's setting up an ABC structure down, but Gilead can absolutely run to 105, and right now we're at 103. If we go to the IBB, we take a look at the IBB. IBB is up today on 1 million shares, and she's going into 1.9 million. So she also is setting up that a smaller consolidation. But the IBB also has a high volume swing low at that October 15th level. Some of the Dow stocks, you get, let's see, Oxy's up $1.10. You have GM down 4 rather. Big Blue is off $1.92. Oh, let's go to Big Blue. This is Big Blue, man, is in trouble. Look at with the market up, Big Blue is making a run again for its lows. So your swing low on Big Blue is 160.05. Your volume is 4.0 million. We're already at 3.7. Big Blue is in trouble. Big Blue wants to come under that swing point. You come over to that swing point in Big Blue and get out of the way. This is Tom O'Brien. This is TFNN. Dow Industrials right now are up 85. Nasdaq's up 37. S&Ps are up 14. Gold's up 11. Silver's up 8 cents. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 81. Nasdaq's up 35. You get the S&Ps up 13. And what we had over in Europe out here today, you had the DAX was up 1.6%. The FTSE was up 0.5%. If we go over to the DAX first and we take a look at the DAX in Germany, what you'll see is that it's up $150. Now, this is way off its highs. Bottom line is that you're at 94.56. And the swing point that it wants to test is the 94.67. So we'll see how we come into that. You go to the FTSE and the UK, and what you have in the UK is that was up $37. That's at 67. 6709, that high out there that it's going after is the 69 level, so it's a lot higher. If we go to the XLF, we take a look at the financials out here. Today the XLF is up 12 cents, 7 million shares. The 7 is going against 38, so this is really anemic. This is like pretty amazing, actually. That is about as weak as I've seen in a long time. Actually, it looks like it's almost a mistake. Seriously. So check this out. 7.8 million. Yeah, it almost looks like there's a mistake here. So the XLF, folks, normally does about 30 million shares, even 24. 7 million, it just doesn't, this is, let me go to JP Morgan. This is pretty amazing, actually. So JP Morgan is doing 6 million today, going into 17 million. BAC, Bank of America, is doing 30 million, going into 48. BRK, let's go to the largest weighting structure, which is Berkshire Hathaway. That's doing 1.7, going into 2.7. None of them seem to be as anemic as the XLF in general. That's pretty intense, folks. It's when you look at this, it's totally like it's not a mistake, but I haven't quite seen that type of anemic buying period. Well, actually, here's one. It was 11.4 million the last time that it went from 24.18 to 24.03. Bottom line is that that's pretty intense. Morgan Stanley, we go take a look at Morgan Stanley. MS, that's an ABC, that's all going down. That can't even hold price. That's doing 3.7 million going against 7 million. So it looks like these financials basically are going to crack even with the S&P at these highs. Let's go over to the oil service industry. We take a look at the XLE. XLE still can't get any traction here. The XLE, the high volume swing low is 80 to 77, and right now we're at 86.20. That is going to come down and try to get into that level. If we take a look at the ExxonMobil, which is the largest weighting structure, we're at 95.10, and that wants to test the 90.61. Inside the, let's say inside the Dow Industrials today, what is pushing the Dow up? You have Boeing. BA is up by 260, trading out at 131. United Health is up 183 at 98.30. You get Intel up 62 at 34.86, and GE is up 40 cents at 27.04. Taken away from it, Home Depot's down $1.40 at 96.63. You got Microsoft off 41. Big Blue's the number. That's the third one. That's down $1.94, and you got Marvell off 9 pennies. The NDX 100. What's giving the juice inside the NDX 100? You have Illumina up 7.47 at 190. Discovery Communications up $1.18. REGN is up 13 at 412, and AVGO is up 292. Taken away from it, Microsoft, Staples is down 18 cents at 12.78. You get Yahoo off 68, and Citrix System is down 73. So there's some commodity action out here with the dollar pulling back, but it's not affecting the S&P whatsoever. The XAU, this is what you have with the XAU. The XAU is trading up 286. Now, the XAU, folks, has already rejected the 2008 lows, had lighter volume, nice test, gone topside. XAU right now is at 74. That's on its way to 82. The HUI, the Gold Bugs Index, that little baby did the exact same type of rejection of lower price. And what the difference is between the XAU and the HUI strength-wise is this, is that they both rejected the 2008 lows. The HUI, however, had dramatically lighter volumes on the test. HUI right now, the Gold Bugs were at 179.72, and that wants to run to the 202 mark. What we do have inside the metals area in general, it looks to me like, bottom line, they've tested their 2008 lows. rejected them, have two separate signs of strength, and they look like they got action. What's particularly encouraging inside the equity market for the gold and silvers is that a few of these have absolutely got out of their range and came back into their range with huge strength. And you got to remember something. You can't bust them down. Guess what? You're going to bust them back up. What you do have, because of the 13F filings also, is that you're going to see, you talk about a change of ownership. This is pretty intense. In fact, I was looking at this. We didn't buy this today, but I was looking at this. I believe it was Humana I was looking at. So the change of ownership is pretty dramatic when you take a look at, it was Humana I was looking at. So, when you get to these lows, of course, professionals, everyone's getting out of them. Well, guess what? That's what makes a market. Everyone else is getting in them. And when you look at Humana, it's like, oh my God, man. I mean, there was so many big funds getting out of Humana, okay, at the low. But guess what? Just as many were getting in. The differential is unbelievable. I mean, I was looking at it. Humana was really sticking out like a sore thumb that, wow, you talk about a change of ownership at a low is pretty amazing. Now, if we look at, the gold report went out today, and I didn't buy Humana because I want to see another sign of strength. Humana, I want to see two good signs of strength off of bottom after a test to a lighter volume, and then you buy the pullback. I mean, Humana hasn't had it yet. But what it has had is this, is that when you take it back and when you take a look at it, it got down to the 2008 low. The 2008 low was 330. The volume there was 578 million. Well, we got down there, and we're going to do about 250 million. So you have a nice rejection of lower price with dramatically lighter volume. Now what you're going to wait for is a sign of strength. You want a couple really good signs of strength, because when you can't bust them down like that, guess what? You're going to bust them back topside. And the key, of course, is going to be that dollar. Did the dollar top or not? It would have been a lot cleaner if, in fact, we got those 400 ticks higher and hit that top. We didn't do that. It's always nice when you actually have the test, hit the top, know that it actually ticked right to the tick no matter how large the number is. Meaning in this particular case, we're talking about a number that's up at the 88.88 level. That does make a difference. There's no two ways about it. If we go take a look at the... you stay right there, folks. 877-927-6648. Dow Industrials right now up 79. Nasdaq's up 35. S&Ps are up 13. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You can get all of it right in your cell phone, tfnn.mobi. If you'd like to watch Tiger TV, check it out, folks. We get a whole HD setup right now. Just brought it up yesterday. Absolutely outstanding charts.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, you get the Dow up 69, Nasdaq up 34, S&P's up 12. And, folks, if you haven't test drove the Nadex platform, come over to our website at TFNN.com. You can see the banner on the top and the side. You can bring that platform up. They'll put $25,000 of paper money into your account. You can see just how dynamic this platform is. And all you need is a little volatility, which we're starting to get out here. And I suspect we're going to get a little volatility for the next 35 minutes into the close. Why? Well, what you had is this. We've hit the 2054. You've had a couple nice expansions on the way up. What we just had just now is just a little sell, but you had a pretty big expansion of the volume. You know, so that someone is pushing into that, and we'll see whether, if in fact, you're going to go from the 5.2 level down to this 4.7 level. See, the 2047 is the last place that intraday that you had juice, and coming into the close here, you very well could get that. So it's going to be interesting if, in fact, that's what we have. Now, that wouldn't be a failure. It would take a lot more than that in order to be a failure after you get this leg up. The reason being is that the cash S&P would have to come all the way down to the 2046 level, and I don't see that happening off this 5 level. So we'll see where it does shake out. What we do have coming out of here tomorrow at 2 o'clock is that you get the Fed meeting minutes, and the way what we're talking about here, we have divergence in a big way, and what it is that dollar versus the S&P, and what you had out here today, the dollar gave it up. S&P decided to spike higher. Dow spiked higher. What didn't happen is that we didn't have the small caps get higher. And this is where this is really crazy. Inside the small caps, folks, you have a lot of small commodity stocks. That not spiking higher, it's not as easy analyzing, especially intraday, the Russell 2000 because there's so many stocks in it, and there is small weightings. It's not like the NDX 100 or the Dow, even or the S&P. The S&P, you can get the information stocks are the largest, then you get the energy stocks, then the financials will come in there. So you really got to look at it that night to see, okay, what basically was getting taken apart inside the Russell. What you do have, however, is that the Russell couldn't get even to the highs of last week, which is really unusual. It just doesn't, there's something inside here that's selling basically on a heavy basis compared to where we were. So we'll see where this whole baby does shake out coming into the close. Volume-wise out here, what we're going to have is this. You're going to have volume and the NYSE coming in at about, let's see, we're at 338. So we're going to be about 560, which is that's going to be one of the slowest days. Well, right now, we are at the slowest day of the year thus far. That's what this is telling me. We're at 483 right now. So in the NYSE, that's going to be the slowest thus far. NASDAQ, not so. We're at 1.3 billion. That's saying the NASDAQ's going to come in at about 1.6. As I said a little bit earlier, what is absolutely unusual was the aspect of the XLF. The XLF, which is the financials, no one's buying them. We're at 8.2 million right now, and that normally runs out at about the minimum is 24 million. So you can see that, yes, they're holding it up. No one's selling, but at the same point, what you have is that no one is buying them either. Let's go to Jack in San Francisco. Hey, Jack, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
Yeah, it's a little chilly out here, but it's fine.
It is. It's chilly. Okay, you get that big cold vortex coming right across this great country of ours.
True.
So you want to look at Great Panther?
Mm-hmm.
Okay, so do you own this? You're looking to buy it?
I bought it at 110, and kind of held it for some time.
Okay.
So.
Good for you. Okay, so this is what you have. Great Panther right now. So what Great Panther has done is this. Let's bring this all the way back so you can see the correlation of exactly what it did. Your swing point on Great Panther, it was 65 cents. You got down to 65 cents. It's pretty amazing. And this wasn't the 2008 swing, okay? This was the swing point that was in 2013. So it tested its swing, did it on lighter volume, come off that area, and what you have had thus far, and this is the first sign of strength was really subtle. The first sign of strength came in on November 10th, after the low was established on the 7th. You pushed slightly higher with 865,000. Next day, you pushed to 79 with 806,000. Then, and now watch this, folks. This is important to get your head wrapped around. Then you move back with 550. So you back down. Lighter volume. Then what ended up happening, you start pushing higher yesterday. Volume started expanding, 628,000. Today we're doing 1 million. You're taking the swing point out. The swing point is 79. It had 806,000. You just took out the swing point with volume. This baby's on its way right now to 89. It hit, it almost hit 89 today. The bottom line is it's on its way to 137 to 149. It's going to be going after the swing point of July 11th of 2014. That's how it's set up.
Okay.
Okay, man. Have a great one, man. Have a safe one.
With the Fed,
go ahead. Sorry. Go ahead. What?
With the Fed meeting coming up tomorrow, do you think that, there is a chance that the gold prices and the silver will kind of back down?
With the Fed meeting coming up, we know that we either can go to moon or go to hell in a handbag, right?
That's true.
That's the reality. So the way that the market is set up right now, it looks like the dollar basically is topped. Gold looks like it wants to go topside, but in a realistic world, which we're dealing with right now, those Fed minutes look like they're going to say quite a bit as to where we're going. I can tell you, so check this out, folks, okay? This is on a fundamental aspect now. On a fundamental aspect, what you have out here, and this came in this morning, was this, is that the expense ratio, meaning the amount of inflation that is actually coming into the marketplace, has gone. It's not that it's gone up, but everyone thought it was going to go down dramatically because the energy prices have gone down, and it didn't. It actually went up. It ticked up. That in itself is saying that, okay, if that ticked up and energy has gone down so dramatically, what is inside the underlying market that is pushing prices slightly higher? That is positive for the metals market, for the commodities market in general. That's where that shakes out, man.
Okay.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Right now, you get the Dow up 67. Nasdaq's up 35. S&Ps are up 12. If we go over to Rheingold Resources, we take a look at Rheingold. Rheingold right now, we are at 70.03. She's going after a swing point of 70.91. And this has this is cool. This has the juice too. Well, 1.3 million, that's going after 990,000. Let's go to Robert in Paramus, New Jersey. Hey, Robert, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Great day. Remember you told me to buy gold 2 weeks ago? That was a good one.
That's good. It's a beautiful thing.
I have another question for you. I'm kind of on the fence here. Would you short the IWM now, or would you wait?
If you're going to short it, what you want to do is this. You can short it right now and just put the stop on the other side. What's surprising is that it blows my mind that the IWM couldn't even get it into the 118 today. Wait, 117.12. Man, it should have made it, and it hasn't. Since we're coming into the close, you're at 116.56. If that closes under 116.93, which it's going to do, yeah. Because that was the high of yesterday. They can't even hold the high of yesterday. And it's not like the markets are up big numbers, folks, but they're at new highs. So the S&P went to a new high. The NASDAQ went to a new high. The SPX went to a new high. That's saying, hey, man, what's wrong with the, IWM? It's saying that, hey, guess what? Someone's selling it, man. Someone's selling it big time, too.
Okay.
Okay, man. Have a great one.
Thanks very much for all your help.
Okay, man. Have a great one. Have a safe one. Let's go to Mike over in Thailand. Hey, Mike, what's going on?
Hey, Tom.
How you doing, man?
All right. How about yourself?
I'm doing great, man.
All right. If it weren't for everybody, all friends and relatives dying around me, I guess I'd be doing better, but my trading's doing fine.
That's a beautiful thing.
Well, anyway, good comeback. Tom, there's a couple of things that concern me here. I'm a raging bull on gold and silver long time. I changed my mind on November 1st, but I'd like to take you to look at something. Look at SLV. It's trading off that 1572 high. That's really bothering me. I'm wondering if we're in for a correction in these metals. It's just short term. And if that's the case, they're going to knock all these mining stocks down.
And for a correction, the gold and silver stocks have got killed. There's been a correction going on since last April. Yeah, you stay right there.
I'm talking about, all right, thanks, Tom. I'm talking about real short term.
Stay right there. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 51, Nasdaq up 31, S&Ps are up 10.5. We're talking with our man Mike from Thailand, and we're talking about the metals in general. The bottom line, Mike, is that these metals have been in a correction extraordinaire. So
I should have clarified myself, Tom. Sorry about that. You're exactly right, but I'm talking about a very short term. I'm talking about a very short term correction, because what I'm looking at is you look at SLV, and the volume is really dropping off on that. You look at GLD, the volume. I'm just talking about over the last 3 days. Volume's really dropping off of that. GDX, volume's really dropping off of that. I'm talking about a very short term correction, because if they can knock these stocks down, then they can buy them back for cheaper. But go ahead. I'm sorry.
My take is that silver is much weaker than gold. So you start with the SLV. There's no doubt that silver's weaker than gold. Gold right now is strong. Basically gold came off the bottom, did what it was supposed to do. 2 signs of strength. Has traction underneath it. The XAU, the HUI has traction underneath it, and I like how it's trading, man. So to me, it's going to be a one-way trip here, and specifically a one-way trip means, folks, it's going to be hard to get in these equities now. So we'll see where that shakes out. But
one quick word, Tom, and I'm sorry to keep taking up your time.
You're not taking up my time, man. We're here to growl and prowl with you.
All right. Thanks. I really appreciate it. But honestly, I think we're testing 50 on silver next year, and I think we're testing 1900 on gold. But here's the deal. Now, just what you brought up about the IWM and the Russell 2000.
Yep.
If we crack below 1160 on the RUT, on the Russell 2000, we could get a surprise correction. And I'm thinking, in the overall stock market in general, and then we'll see a sell-off in gold and the equities. And like I said, I'm just talking about a temporary, 3-day sell-off.
Listen, man, I hear you loud and clear. My take on this deal is that the metals are absolutely reacting differently than the S&P or the NASDAQ or the small caps. And specifically what I mean is that when, if we go from 2001, folks, going up to the present day, okay, these markets have had, meaning the metals market, have had huge pullbacks. And the correlation before this pullback, the S&Ps and the metals and all the commodities were moving the same way. Well, that's not the case here. All the commodities are down. The S&Ps and Dow are at the high. What is happening, what looks to me, is that the commodities are getting traction. The other markets are still at highs. So we'll see where that shakes out. But what that's telling me, and particularly when these numbers come out today, it says, you know what? I think inflation is starting to creep in here, and you're going to see a velocity of cash. What we've had is this, folks. There's plenty of cash in the economy. What hasn't happened is that no one has released their cash to spend it. You get a 1 velocity move, never mind 2 or 3 times velocity move, you're going to see inflation creep up very quickly. You're going to see the wages go up very quickly. And what you're going to see is that you're going to see these commodities, and if that's what we have, you're going to see gold move very quickly, not in a small way. So that's my take. Technically it's set up just how I set up in the art of timing the trade. Fundamentally, that's my take on a fundamental basis. Hey, so what time is it in Thailand right now?
3:55.
3:55. You're an animal. You're awake at 3:55 in the morning. That's a beautiful thing.
Well, the way these markets are going, Tom, I mean, I gotta keep my eye on this stuff, and I gotta sleep during the day, because normally I don't do this, but the way these gold markets and everything are moving, I gotta, you know, I gotta adjust my lifestyle here a little.
You just got to get long and strong in gold right now and hang in there. You know, and folks, just so you can get some, you know, this whole deal, some people think gold's going to 5,000. We're not going to 5,000 in the gold market. If we go to 5,000 in the gold market, just get out the M16s. You know, gold's going to, you know, go from, we're at what? We're at 1,200, you know, 12 to 1,500 is a good expansion. You know, I can see that. I can't see a lot higher prices just at this particular point, but cooking, brother.
Next year.
Okay, man.
Thanks a lot, Tom. See you later.
Have a great one, man. Have a safe one. If we just go over to this S&P quickly, too, what you're going to see, and, you know, when they leave these footprints, these monsters are a trip, folks, because you know, it's just a small type of sell-off, but, you know, someone just keeps hitting this market because, you know, we had the high out here at 54, 200.54, and, you know, the first sell-off, you know, did 39,000 contracts. Right now, you're at, well, you got 6 minutes into it, and we're already at let's see, we're at 30,000 contracts. And, you know, we'll see whether it gets down to this 2047. You get down to 2407 with some juice behind it, it'll get interesting tomorrow morning. Well, particularly get interested going into that 2 o'clock time frame tomorrow. It looks like the 2 o'clock, oh, excuse me, folks. The bond market is at October 15th, spike high, and bonds wants to be tested. You know, my take is that we're going to go higher. We'll see if it does go higher. It's going to get tested, though. That's how this is shaking out. And you can see coming into the close, there's a lot more buying in the gold market. I mean, big time, too. So these are buys on close, folks, okay? Gold Corp, well, Randgold's up $1.34, and Eagle's 116. You got some action in here. They're laying some trades on coming into this close and putting some juice behind this move. And that is how gold and these funds like to trade. What you will see, because they're laying into them right now, you're going to see more buying on the close. That's how this is shaking out right now. So we'll see just how big or how strong it is. The dollar index hasn't pulled back yet. What happens with the dollar index, just so you know, though, is that the activity in the dollar index is approximately at 0830 Eastern Time to about 1:30. That's where it really shakes out. It's very unusual that you have large moves after that. The reason being is that the dollar index in itself, 60% of it is the euro. So it has to do with where that euro wants to go, where that euro is trading. And, you know, so we'll see where it's at. Don't forget, folks, all the programming at TFNN right on your cell phone, tfnn.mobi. Check out Tiger TV, folks. It's all HD right now. You're going to see the clarity in the charts. Absolutely phenomenal. You can do that right in your cell phone. tfnn.com. Go to the top, hit Tiger TV. You're going to see those charts. You stay right there. I mean, Andy Heck's going to be coming back in the next hour. We're going to be growling and prowling with you. Dow's up 48, Nasdaq's up 31, S&Ps are up 10. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 40, Nasdaq up 31, S&P's up 10.5. Gold contract up $12.80, trading at $1,196 an ounce. Silver up 13 cents at $16.19 an ounce. Platinum up $3 at $1,204 an ounce. Copper down 4 pennies at $3 a pound. Light sweet crude off $1.34 at $74.30. And there's some nice divergence out here, folks. Oil still looks like it wants to get down to the $70 level. Gold looks like it wants to go to $12.55. King dollar looks like it topped out at 88.33. It was testing the high of 2010, which is the 88.88 number. So we're going to see where this old baby does shake out. Bonds, you had the 10-year up 5 ticks at 126.20, 30-year up 9 at 141.21, and King dollar down 375 ticks at 87.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Cash S&P, you go to 2056. We did 688 million. Gets over these highs and gets over them substantially, too. We go to the SPY, the SPY. what the SPY did out here today. SPY did 72 million shares. We're at 205.55. The last high was the 203.83. But even at that 204.83. But with that day, we had closed at 204.19. So you're up at the $1.30 over those highs. NASDAQ Composite. What do we have at the Composite? The Composite also went to a new high, stayed at a new high. Actually, this is subtle. Oh, interesting. Here, check this out. So the NASDAQ didn't stay at a new high. Oh, I love it when it's this subtle. So check this out. Composite gets to 4709. The last high out here was 4703.12. Well, we closed out at 4702.44. So bottom line, Composite didn't make it. The biggest divergence would be the small caps, the Russell 2000. Russell 2000 didn't make it, period. Hasn't made it to its highs. And this is with the Dow making new highs, the S&P making new highs, and the NASDAQ making new highs. The Russell 2000 couldn't even get over the high of yesterday. The Russell is at 1171. The high in the Russell is 1213. That high was established on July 1st. That's saying, hey, Russell wants to go downtown. So we'll see where this baby shakes out. 2 o'clock tomorrow, you get the Fed minutes coming out. That's going to be it's going to put some volatility inside the marketplace. Gold, what we have with the gold contract, we're going to be talking with our man, Mr. Andy Hecht, in a few minutes, too. Bottom line, gold wants higher price. We did 161,000 contracts out here today. It got inside the range. The range we're talking about is 1183.30. We're at 1196. That would be saying that it's going to make a run for 1255, and we'll see whether we get juice behind the run. We'll see if we get that expansion with volume, wide price spread, accelerated volume. What we have had in the XAU and the HUI, which is just dynamite, is this, folks. It tested the 2008 lows, did it with lighter volume, and took off out of there. And when you take off out of there, which the XAU and the HUI have done, that is saying it's going to be a one-way move. And these one-way moves are brutal. Specifically, and we're going to know real quick, because if we had a one-way move again tomorrow, guess what? You're going to see this thing, and it's going to be a chase is on as to getting in that market. I expect what you're going to see, that is all going to be all about that King Dollar. So let's go over to King Dollar right now and take a look at it. So King Dollar today pulled back, but you still had light volume on the pullback. We only did 26,000 contracts. So it's really still a toss-up. Has King Dollar tested its high? And if it had hit the price point, the price point was 88.88. We hit 88.33. It's like, man, you couldn't get up there another 400 ticks. Bottom line is it didn't. We did 26,000 contracts today, and that's light volume. Intraday, and this is what's cool, so if you're watching Tiger TV, what you're going to see intraday, it's like, okay, this baby is set up for the morning to go after its swing point of 88.57, and if you do get that, then we're going to be at 87.34. And the number you want to keep your eye on is this. It's 87.24 on the continuous contract. A number of 87.24 on the continuous contract at the close of this week would be a further confirmation and a higher probability that the dollar has topped. Now the question is going to be, if in fact we get that, the question is then, is this a topping procedure 5, 6, 7 months? Or is this a topping procedure that's just going to be a normal pullback into the 83.89 area? And this is what you get. This is how you're going to be able to get a higher probability of what that answer is. It's going to have to do with how we come off the high. Meaning, do we come off the high with volume, or do we come off the high, and with volume means that you have an expanded volume coming off that high. Because if you have expanded high off that volume, what ends up happening is that projects a much larger correction inside the dollar. And what we do have inside this dollar is this. The trending aspect is pretty dramatic. When the dollar trends like this, if in fact that was a failure, last low out here in the dollar was at 78.93. Can you go that low? I don't think so. But bottom line, That's how they like to trade. You know, when the dollar trades, if we go back, you just go back years. It trades for months going up and months going down. You know, so we'll see if, in fact, that's how this baby is going to shake out. Bonds continue to want higher price. We take a look at this bond market, the 10-year, the 30-year. They were flat out here today, building cause. You know, this 2 o'clock tomorrow afternoon is going to be a big one. Why is it going to be a big one? Well, it's going to have to do with the aspect of the Fed thinking when they're going to raise rates. My take, folks, is that they're not going to raise rates. My take also, though, is that I suspect we get inflation that's starting to come into the marketplace. If you remember, though, that's what the Fed wants. The Fed wants inflation coming into the marketplace. Why? What ends up happening, folks, you get inflation coming into the marketplace, bills are going to get paid very easily. Now, they don't want inflation to get whacked out, but bottom line, what inflation... Let's say if inflation is coming in, it's going to be really bizarre because we know that energy prices are dramatically lower. 877-927-6648. We take a look at some of the high-volume stocks in a low-volume market. This is what you have. Apple was up $1.48. You had Baker Hughes down $1.68. That's the takeover deal. Gilead Science up $3.27. What you want to keep your head wrapped around here, inside the NASDAQ 100 in particular, is the IBB. The IBB has been very volatile. It's up $641 today. $295 is trading at. We did 1.3 million shares. That is going into 1.7. So that's still a consolidation, a high-end consolidation. But you have a couple low swing points that have dramatically higher volume. I'm sorry, folks, excuse me. The XLF. The XLF today, you talk about anemic volume. It was pretty amazing, actually. The XLF did 12.5 million shares. You're coming into 38 million. We were doing 7.5 million at 20 past 3. That is anemic volume. That is saying that the financials themselves, you don't have a lot of buying in the financials. And the financials, folks, not that they're a large weight. Well, they're a decent weighting structure inside the S&P. But bottom line is the financials want to go south. Guess what? It's going to be hard for a few of these others to get up and get some juice on the top side. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom.
How you doing, man?
Not too bad. Much better than yesterday.
That's a beautiful thing.
That storm was pretty bad. It rained all day.
Really? Wow.
Yeah.
So,
well, better than New York. New York, I heard Buffalo got 7 inches today.
Wow. Man, Dan up in New York, he's going to get flooded, I guess. What are we looking to look at today?
Kind of a little one, but it's kind of a curious stock. Fuel Cell, FCEL.
Let's take a look. You get Fuel Cell. The low is 128. The high is 474. Okay, so you just stay there. We'll come right back and we'll growl and prowl and dissect and bisect this with you. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials finished up 40. NASDAQ up 31. S&P's up 8.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Hogan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinker can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 40, Nasdaq up 31, S&P's up 8.5. We're talking with John from Winchester. We're talking about fuel cell, FCEL. So if we take a look at fuel cell energy, the low is 128, the high is 474. This equity, let's see, they develop commercialized fuel cell power plants for electric power in general. Okay, so let's pull this back. Well, so what are you looking to buy this? What, to run to what, that $4 level, right? Is that what you're looking at?
You got it. Yep.
Yeah, I'd wait till it has a separate sign of strength, because this has only gone one way in 10 years. You know, seriously, man.
Hey, do you feel the semiconductor still doing an ABC down?
Do I feel like what?
The semiconductor embassy's doing.
Well, here, let me pull up Intel. I was looking at Intel. So Intel. Okay, so it got over the, it 34.78, 34 million versus 30. Okay, so it failed today.
Yeah,
the semis failed. So Intel still wants to run down to this 31.65. Intel did. Yeah, 31.65.
Good. That's what I want to double check. Thank you, Tom.
Have a great one, man. Let's go to Jim in Boston. Hey, Jim, what's going on?
How much, Tom? How you doing, buddy?
I'm doing great, man. You want to look at Bed Bath & Beyond?
No, Best Buy. Tom, let me just tell you why. Sunday, I needed to get a new phone. My old phone died.
Yeah.
I went to one Best Buy, and they were so busy. The guy said, "Go to the next mall. They're right next to each other, the North Shore Mall in Peabody and the Liberty Tree Mall."
Okay.
Tom, there were people lined up. There were 6 people waiting on phone, helping people to get phones. And I'm like, there weren't enough. So I'm saying to myself, is Best Buy doing that well, or are the phones? I don't know how to play this. Either the phones or the Best Buy.
Nice. Okay, cool. Okay. So Best Buy is what, BBY, I think, right?
Yes.
So let's take a look. You got Best Buy, the low for the year is 22, the high is 44. Okay, so we pull this back, and there's no doubt that the retailers, a lot of the retailers, let's put it that way, look like they were jamming. Okay, so I wouldn't be buying Best Buy, not at this point. Best Buy, you're at 34. It's coming into vicious downdrafts. He had the wicked downdraft from October, went from 37 to 20. Then it went from 41 to 22 again in January. This is just a counter trend bounce, man. It's not good.
All right.
Yeah, it's weird though. I know what you're saying, man. Listen, Best Buy. If you don't know this, folks, okay, what happens with Best Buy is that you can go to Amazon. Let's picture this. I just did it, and I'm going to do it again this weekend. You can go and hunt on Amazon if you're buying a TV. I happen to be buying a TV, okay, and I was buying a plasma TV. You can get a price, and the price on Amazon is insane how cheap it is, okay? You go over to Best Buy, and Best Buy, let's say that the $2,800. On Amazon, if that's at $1,700 or $1,800, they will match it right then and there. So I think they're probably getting killed when folks know that.
Yeah.
I'm going to go pick up this other TV, because I know Best Buy has it, but I know that they have it about $800 more than Amazon. But guess what? I already did this. Well, I did it about 8 months ago. They match it in a second. But it's a great thing to know, because it's like, okay, man, you pick it up, you bring it home, and that's it. So
yeah.
Cooking, brother.
All right. Thank you.
Have a great one, man. Have a safe one. Now, folks, let's go over to our man, Mr. Andy Heck. And don't forget, each and every Tuesday, Thursday, Andy has a great program right here at TFNN, 5 to 6 Eastern Standard Time, as soon as I get off. Also has a outstanding newsletter. It's the Technomento Commodity Report. You can get that by coming over to our website at TFNN.com. You go to newsletters, trading newsletters. You can see the Technomento Commodity Report right there. You can test drive it right here, right now. Andy Heck, what's going on?
Hey, Tom, how are you today?
I'm doing great, man. You having a good day out there?
I'm having a great day, and I'm looking forward to seeing you later this week.
Yeah, there's no doubt. I'm going to be out there growling and
Come here,
prowling with you.
bring a jacket. It's a little chilly.
Bring a jacket. Oh, my God. I haven't worn a jacket. Yeah, no, I have. Listen, it's 60 degrees in Florida.
Yeah, it's cold. It's cold everywhere, but we get the least of it, that's for sure.
Yeah.
So, Tom, I want to talk about a lot of commodities today, but I want to start by talking a little bit about this Everbank Market Safe brick product, because I find it very interesting. I've taken a really good look at this product.
Yes. And,
this product has a lot of these brick currencies, which is the Russian ruble, the Chinese renminbi, the real from Brazil. It's got the rupee from India, and it's got the South African rand. And it's kind of nicely balanced between commodity-producing countries and commodity-consuming countries. And a lot of these have been, with the rally in the dollar, they've gone to It's an amazing product because it's a guaranteed principal product.
Yes.
There's very little there's really no risk other than the interest coupon. And I think it's something to look at, because over the next 3 years, look, we have our views on what's going to happen next 3 months, next 6 months.
Sure.
Over the next 3 years, these markets are cyclical, and this product could do very well.
And folks, as you're at TFNN, you'll see the Everbank banner. You can hit that banner, go over, and you can just go to everbank.com /BRICS, BRICS, and that will pull up the market safe products. What is intriguing here, and as Andy's talking about, is that the product itself the principal is guaranteed. It's a 3-year product. You have until December 3rd to go into it, because it's a closed-end type of product. So you go into it by December 3rd. The minimum is $1,500, and it works just like a CD. What the difference is, if in fact you think that any of those currencies are going to go higher, you get the upside of the currencies, but you don't get a downside if in fact they continued lower. So it's really...
And that's a beautiful thing. And if, you know, the way I broke it down, I looked at it, you got China, the biggest commodity consumer in the world. So
Yes.
if commodities go lower, they're going to benefit. You have India, who's also a large consumer by virtue of population. Then you have Russia, you have Brazil, you have South Africa, big commodity producers. So it's a very nice kind of balanced index from a commodities perspective. That's why I really like it.
Yeah, no, what's intriguing, there's no doubt, is how Everbank puts these together, that, in fact, you can have your principal secured. And that's huge.
Exactly. And,
well,
and the beauty of it is you don't need, a massive investment. It's a $1,500 minimum. That's a pretty attainable minimum for most of us.
Well, you know what's cool, too, is that all CDs these days, folks, okay, CDs are paying, what, 1.5%? So what you're really giving up, you're saying, okay, I'm going to give up 1.5% if you're in the CD market. But guess what? If these rates go up and our dollar is going down, which, it looks to me, we'll find out whether it really topped out. But if it has, well, guess what? You have juice underneath that product.
And big juice.
Yeah, and you can hit the banner right on our website, folks, at TFNN.com. Just hit that Everbank banner. Andy and I are going to be coming right back, folks. Dow Industrials finished up 40. NASDAQ was up 31. S&P's up 8.5.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop for January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Market Dow finished up 40, Nasdaq down 31, S&P's up 8.5. We're talking with our man, Mr. Andy Heck. And don't forget, folks, as soon as I get off here at 5 o'clock, next 30 minutes, our man Andy is going to be coming up growling and prowling with you from 5 to 6 Eastern Standard Time, as he does every Tuesday and Thursday. And don't forget, at TFNN, folks, all the programming right on your cell phone, TFNN.mobi. If you happen to be watching Tiger TV, what you see is that we have a brand new, we're all HD now, straight across the whole network, dynamic. The charts are absolutely amazing. You can get that also right on your cell phone. Just go to TFNN.com, hit Tiger TV on the right-hand side, and then you get the audio plus the video. Andy Heck, okay, so commodities. What are we looking at here?
All right, so first I want to say how good the new set looks and how amazing the graphics are.
Yeah, they are. They.
And I'm looking forward to getting my mug on there very
That's
soon.
That's right. Your mug's going to be up there, man. They're going to be throwing darts at you, man.
That's right. That's right. Well, some days flowers, some days darts.
Yeah,
depending on
listen, as long as they're throwing something at you, man.
So listen, let's dissect and bisect the gold and silver markets together, because I got a lot of things to say about it. You know, so it all starts with 2 consecutive Fridays of key reversal days. You know, on Friday, November 7th, I got a gold chart up here. On Friday, November 7th, we had a key reversal, meaning we made a new low and closed above the previous day's high, which is a bullish formation.
Yeah.
We had that again last Friday. Same thing. But if I go over to the silver chart, very interestingly, Friday, we have the same exact pattern. And Friday's move in silver was pretty dramatic. So from a technical perspective, that's a pretty bullish formation, and that gives moment to pause. Now, in gold, there are some very bullish things going on. And let me go through those quickly. First of all, gold's tightening up.
Yeah.
And I don't know if you've seen or you've mentioned that GOFO rates, gold offered rates in London, have gone negative. And what that means is that the amount that it costs to borrow gold from central banks or for producers to borrow it from dealers has gone up a lot, okay? Now, I think that's due to a couple of things. Number one, physical demand has picked up.
Yeah.
And when physical demand picks up, it's harder to borrow gold because people want to buy it and hold it. The second thing that's very interesting, and it all is intertwined, and the reason that I'm really friendly to gold now and think that there's an implied put under the market is this November 30th referendum in Switzerland. The Swiss are going to go to the polls, and they're going to vote on this gold referendum. It's got three parts to it. The first part is to repatriate all of the Swiss gold within Swiss borders.
Okay.
The second part is to boost the amount of gold that they hold as portion of their foreign currency reserves from current levels, which are around 7 to 8%, to 20%. That's enormous, Tom. The Swiss currently hold about 1,040 tons of gold. All right?
Yes.
This would require them over the next 5 years, a yes vote, to add or purchase another 1,500 tons. That's an enormous amount of gold. So if this
I
passes,
like that. Yeah. You there?
Hello?
Yeah.
Yeah, I'm here.
Okay.
That's an enormous amount of gold. And it also says that, if it passes, that they can't sell the gold. So it kind of takes it out of the politicians' hands. So I think that the tightening in gold it could very well be that some of the dealers are getting ready for a part of the Swiss gold to perhaps be returned, and they can't lend it out now. Now, the Swiss have 1,040 tons. London is the hub of trading. I would venture to guess that about 30%, about a third of the Swiss gold is kept in London for liquidity purposes. Tom, that's 10 million ounces. That's a lot of gold.
Right. Right.
So I think all of these things, the technical action, and it goes to the technomentals, the technical action on the key reversals, the fact that the path of least resistance now seems higher, and fundamentally the Swiss referendum on November 30th, between now, November 18th, and the 30th, I think there's an implied put on gold, and gold can go a lot higher.
There's no doubt. That's definitely right around the corner. Do you know what I'm saying?
Right. Now, there's going to be, if there's a no vote, and the no's are leading in the polls slightly, but it's very close. Very, very close. So it's too close to call this referendum one way or the other. If a no vote comes, it could result in some disappointment in the gold market, and the price might fall, but I think it'll fall from a higher level than it is now. That's certain to me.
Well, and we know that we got down to basically at production or under production, and an economy, a commodity in general, once you get to that level, well, guess what? The lower it goes, the more companies that go out of business, and the gold doesn't come out of the ground, or whatever commodity we're talking about doesn't come out of the ground. So
that's absolutely true. Listen, to that end, just about commodities in general, Tom, I have an article that I wrote that's going to be released tomorrow on Seeking Alpha that's talking about how lower energy prices, particularly oil, is going to lower production costs for all commodities. So if we are in a commodity bear market, that production cost floor has gone lower because for a lot of commodities, energy is the biggest component of production cost.
Yeah, that's pretty cool, man.
So if you look at something like aluminum, hey, did you know that aluminum, like almost 30 to 40% of the cost of producing aluminum is electricity?
Yes, no, for sure. Because I remember Alcoa, even in 2001, that was a dog the whole time. And it's like, hold it, why can't this commodity do anything? But it had to do with that the price of oil was going up so dramatically that Alcoa got killed.
That's exactly right. And their production costs kept going up and up and up and up. Now we're in an environment now where oil prices have come down dramatically. Coal price down dramatically. And natural gas prices, while they're stronger, than they were, they're still not historically. So the energy has come down in aggregate, and basically that means that production. Go ahead.
What do you think about looking at basically, gold's going up today, silver's going up, dollar pulled back slightly, and oil is getting killed. I'm saying to myself, this is interesting because that's like a little divergence. Because what I was worrying about, even though I think that gold and silver want to go higher, I was worrying about, I think oil wants to go lower. So that's like some divergence.
I think dynamic in it. People love speculating tonight.
Yes.
That's important for oil. That makes oil some kind of looking for, the other thing is that OPEC can't get its act together. One country's saying one thing, another's saying another thing, and that's weighing on the oil market, the uncertainty and the fact that there are still spec longs in there. I think that if OPEC comes out and cuts, at their next meeting, which I think is at the end of November, we will see a relief rally in the crude. But maybe some of these crude longs just have to get washed out.
Yeah, interesting.
But there's other dynamics going on in crude. It's the power of the trend,
So what do you think about, let's go over to the gas market for a second. Gas had a heck of a move yesterday.
Oh, yeah.
Pulls back today.
Gas did exactly what it should have done. It did exactly what it should have done. But, it's putting in a key reversal to the downside today oh, no, I'm sorry. I'm looking at the wrong chart. Let me just, down. It filled the gap that in, I think it was November 1st, less than 1% of the United States had snow cover. Today, 50% of the United States has snow cover.
No, listen, the way this is set up, man, it looks to me like even today. So picture, today, folks, the natural gas market went to $4.45. Yesterday, you had $4.45. But we pushed into that with volume. Now, it closed at $4.37, but that's saying to me that, man, it not only wants to go after the swing point of $4.60, but I suspect that $4.82 is on the agenda here, man.
Oh, it looks good. I mean, it's all about the weather, though, Tom. We're going to have the EIA report numbers on Thursday.
Yeah.
I would bet my bottom dollar that it will be a withdrawal, the first withdrawal of the season.
And it could,
the temperatures. Last week it came in at 40 injection.
There's certainly this cold vortex that came across not only just the United States and Alaska, right, but it's a big one, man.
Yeah, it's big. It's cold out there. I mean, Buffalo, warm water makes it even worse. By the way, when you're flying over the United States, going from Florida over to Nevada in a couple of days, just look out the window of the plane. You'll see a lot of snow.
Oh, great. Yeah, I will. That's a beautiful thing. Hey, listen, folks, you stay right there. Andy's going to be coming back at 5 o'clock. Andy, we look forward to show in 15 minutes.
Take care, buddy.
Okay, stay right there, folks. Come right back.
Platinum, grains, crude oil, gold, cotton, cocoa, and sugar. These are just some of the commodities on the commodity market and provides its subscribers with specific trading recommendations based on its trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex the North American Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly with capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of .com. Futures and options trading involves risk and may not be
with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, it wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. And then on TFNN.
Tom O'Brien. Welcome back, folks. Dow finished up 40, Nasdaq up 31, S&P's up 8.5, and Jack in the Box. Jack in the Box just come out with numbers. Let's take a look at it. So Jack in the Box closed at $71.50. That is trading right now at $73.40. And good old Jack in the Box. Bottom line is that this baby not only wants higher price, but someone knew what was going on out here today. That was pushing up with volume. This has been a one-way trip from $18.79. Let's see what they say number-wise. And this is for Jack in the, let's see, Jack in the Box. They'd $3.44, so it was over the revenue. The earnings per share, 53 cents. They made 54. It's not a big deal, but bottom line is that it definitely is going higher, and it had the juice behind the move. Lazy Boy, LZB, Lazy Boy, which is the office furniture, the residential furniture, that closed today at $22.58. That is trading out at $24 right now. Let's take a look at this. This one here, it's $24. The last swing point up here was $23.94. She looks like she wants to go after, pull this back and put this on a weekly for a second. So this has had quite a retracement. This retraced down from 31. She's going to need a lot of juice to get through this $25. We'll see what she gets to. $25 is the number. Let's see what they say earnings-wise. At top estimates there, earnings per share came in 2 pennies over. The estimate was 34 cents. They came in at 36 cents. The revenue was under. That's always interesting. Estimate was $371 million. They came in at 365. Home Depot this morning. Home Depot come out with numbers this morning, folks. That closed down $2. Baby came down, and you just wait for a pullback, though. Well, they haven't had a substantial pullback in a long time. Home Depot had gone topside from 79 to 93. Right now you're at 95. You pull back with some volume out here today, and I expect what you're going to see is that this thing, there's a gap that's wide open at $84.62. It got down to 86. And this is, when you get a gap that is so wide, folks, okay, and it comes back and tests it once and it doesn't fill it, you got to wait for that gap to get filled. And that's where this baby's heading. You know, if the gap gets filled and has lighter volume, then you have a decent setup. If we go right over to Lowe's and we take a look at Lowe's and see the correlation, if in fact Lowe's pushed back with 36 cents, no big. So Lowe's are coming out the 19th. That's tomorrow, right? Yeah. That's tomorrow. So, yeah, so the 19th. And don't go after Lowe's just yet, because Lowe's also has, now, they both have high-volume swing lows at the 15th of October. We're at 58.53 in Lowe's, 51.67 is the high-volume swing low. That is a nice place if you happen to want to get into something long. you pull down to those levels, and if you have lighter volume, then you very well could have some action at those levels. The way that let's go over to Lennar. We take a look at we'll continue on that housing theme, LEN. Lennar out here is trading at 45.65. So this has been in a consolidation. And if you're going to go the buy on this one, this is interesting here. We put this on a monthly. So if this is a high-end consolidation. This almost looks like an ABC up. This is going to be... So Lennar, the way Lennar is trading right now, it looks like it's going to be an ABC structure on the way up. So anything near 40 bucks, you're at 45 right now. You want to be all over this. Well, actually, 37.87. 37.87 has some juice underneath it, but it looks like Lennar is a high-volume ABC structure on the way up. And if it is, it's quite an ABC also, because your A point is 12.35. Your B is up at 44. So you're talking about, what, 32 bucks, which would get you $62. Now, that's in the high 68. That's 68 from 05. But you're building cars. This is building cars to get to higher price. We take a look at, let's see, RV. We take a look at a couple of these houses. Let's see, D.H. Horton. Let's take a look at D.H. Horton. It's D.H.I. D.H. Horton out here is trading out at 24.63. Okay, don't buy this yet, because see, this is intriguing. D.H. Horton is coming into a downdraft that was created out in July. It goes from 24 to 21, monster volume on the way down. This thing's going to back off. We put this on a monthly. Nice setup, though. See, you put this on a monthly, this is a nice setup. So D.H. Horton, we're at 24. You can start looking at about $20.76. Last month, we got down to $19.29. Even 20 bucks, $19.29. A retest of that low would be a nice setup. The reason being is that you could put a stop below $17.50. You're going for 27, so you're going for 10 bucks. Put a stop point and a half below it, and it very well may be an ABC structure on the way up. The A point is $8. The B is 27. So you're talking 19 bucks, which would get you 19.29, 36, and the highs out here were 41. The way that the home builders are set up right now, it looks like that they will build some cars. It'll probably be 4, 5, 6 months to get up into the 2005 highs. Now, with the difference, if you want to see the difference, this is pretty cool watching, folks. The difference in the correlation, I want to bring DHI up again for a second. Actually, I'll bring up Lennar. So if you want to see the difference of a housing bubble versus an acceleration on the way up that actually has some juice underneath it, what you're going to see is this, is that when it was reaching the highs of 2005, you had volume per month of 47 million. We already have volume of 70 million just coming into the swing high, way below the swing highs that they're going after. That's the type of expansion with volume and price that you want to see when it's real price, setting up larger prices, wide price spread, accelerated volume. You stay right there, folks. Mr. Andy Heck's going to be coming up next with you, growling and prowling. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.